Hello, a very good evening to everyone. Welcome and thank you for taking the time to attend our Global Markets Monthly webinar. So today we have invited Mr. Daniel Mark, the Vice President from ChinaAMC Hong Kong, and he will share with you the long-term growth opportunities in China and Hong Kong biotechnology. So before we start, just a gentle reminder to leave your questions into the Q&A box, which can be found at the bottom of your screen, and our speaker will pick some questions from there after the presentation. Okay, then we will also be sending a link for our feedback form towards the end of the webinar. So please help us to fill up so we can better improve our future webinars. Okay, and before I pass the time to Daniel, allow me to share with you on one of our upcoming webinar. Hold on, which is which is this strategy and stock picks 2021. So this is our quarterly strategy and stock picks, which is happening on 1st and the 3rd July. So the one on 3rd July, which is happening on this coming Saturday, will be in line with the US Independence Day. So our speakers will share on the strategies and stock picks for the US market. Then the other session on 10th July will be on the China, Hong Kong, and Singapore market outlook. So if you're interested, do sign up today via the link in the chat box. I'll be sending the link later on. So without any further, I'll pass the time now to Daniel. Daniel, over to you.
Hi, thanks, Elena. Hi, everyone. Let me also start my video here so that you can see my face. Hello, everyone. Thanks, first of all, for PhillipCapital Singapore for inviting me to this sharing section. I'm very delighted to meet most of you here for the first time because for me, myself, and also the company, ChinaAMC, we are based for our offshore entity, we are based in Hong Kong, and meanwhile, our parent company, ChinaAMC in Beijing, is actually one of the largest ETF providers to providing products and services to onshore investors. And for us, ChinaAMC Hong Kong, we are also one of the established Chinese asset management companies in Hong Kong. We now manage 18 ETFs and also L&I products here in Hong Kong. And without further delay, I would like to start our sharing session today, focusing on the China biotechnology. So the topic for today, or the title of today's webinar, is the next biotechnology giant. So I do have a PowerPoint presentation to share with you guys, and I hope that by the end of the presentation, you will have a further and deeper understanding on the China biotechnology industry in China, and you understand more about the underlying companies and the growth potential of these companies, and more importantly, how you can invest in the long-term prospects of this industry. So first of all, let me share the presentation with you. Okay, so for today, the duration will be around 1 hour. So I will leave the last 10 to 15 minutes to address all of your questions from the audience. And for the first about 45 minutes or so, I will share basically a few major topics. First of all, I will share the underlying investment opportunities in biotech sector, particularly in China and Hong Kong, and what are the reasons behind to invest in specifically Hong Kong listed Chinese biotechs, and more importantly, how or through what vehicles you can benefit from the Chinese biotech development for the next 10 years. And particularly in Hong Kong, there's one tracking index that reflects the overall performance of the biotech sector in Hong Kong, which is called the Hang Seng Hong Kong Listed Biotech Index. I know, I think many of you may have heard the name Hang Seng, because the Hang Seng Index Company is the most established index company in Hong Kong. And within this index company, I mean, of course, the most broad-based or most popular name would be the Hang Seng Index. And also recently, last year, the Hang Seng Tech Index. And actually, in fact, apart from these two indexes, the Hang Seng Index Company also launched a index that focuses on biotech. So that's why later in the presentation, I'll also share some more information about this index. So let's go straight to the main topic, which is the underlying investment opportunities in the biotech sector. I'm sure most of you, whether or not you're based in Singapore, in Hong Kong, you can feel the impact that derives from the COVID pandemic, the outbreak since the end of 2019. So the focus or the attention that are paid to the biotech sector or overall the healthcare industry, the overall attention to this sector has raised a lot over the past 1 or 2 years. And from the perspective of the investment community, the development of the biomedicine industry is actually under, I would say, under a heavy supervision and microscope by general investors. And before I talk about the development in China or in Hong Kong biotech, I would like to first share with you some history or some historical data, what we have observed in other parts of the world to show you the prospects of the long-term prospect of a biotech industry in a certain country. And you may know or you may guess that in terms of globally, the largest pharmaceutical market and also the biotech stock market is actually located in the US. And if you look at the top 20 thematic ETFs in the United States in terms of the AUM, among the top 20, you can see in this slide that actually 6 of the ETFs are tracking healthcare or biotech related index with a total AUM of over 80 billion US dollars. Of course, you may also understand that for the top 5, they are mostly technology based, which is I would say is normal and common. But a more important fact is that among the top 20, actually quite a few ETFs that focus on healthcare or biotech has actually attracted a lot of capital already in such a market in the US, in such a developed market. And if you look at the overall performance since 2010, which is more than 10 years ago, if you track the performance of the one of the major biotech index in the US, which is called the S&P Biotech Select Industry Index, which is the red line in this chart that you see now, it's actually significantly outperforming the benchmark index, which is the S&P 500 index, as well as the NASDAQ index, which is the green line in this chart. This is on the basis that US is actually the largest country for pharmaceutical market and biotech industry, as well as the largest biotech stocks listing, which means in terms of the capital market perspective, it's also the largest in the world. And over the past 10 years or so, this index has actually increased by over 7-fold, over 700%. And the annual compound return of this index is over 20% for the last 11 years. So you can see that if you invest in long term enough, the potential return from investing in the biotech industry can be very significant and considerable. And the question to address here today is where we can find the next bright spot or the growth opportunities given that US is already such a developed market in biotech. Where do we see the next boom or the growth bright spot? And our answer to that is you can observe it in China, and particularly for those listed in Hong Kong. So I'm going to spend the next 10 to 15 minutes or so to explain this. which is why we think that China Biotech is the next biotech giant that you can observe. So the first thing that you need to notice is that China is already just second to US. It's now the second largest pharmaceutical market in the world. And it has also the second largest biotech industry globally. And one thing to notice is that, of course, you know that Hong Kong is a major international finance center. And on the back of that, Hong Kong is actually the largest biotech IPO center in Asia, and also the second largest in the world, just also preceded by the US. And as you may see in the slide here, is a picture of our former chief executive of the Hong Kong Stock Exchange, Mr. Charles Lee. He is actually the main driver of the biotech development in Hong Kong for the past 3 to 4 years. He once said that Hong Kong will become the world's largest biotech financing center, means the fundraising center, in the coming 5 to 10 years. And the growth of the biotech stocks in Hong Kong will generate what we call an agglomeration effect, which will further stimulate the growth of the industry in Hong Kong. And the reason for Mr. Charles Lee to say so is that there's actually a major development, or what we call a reform, back in 2018, when the Hong Kong Stock Exchange allowed some what we call the pre-revenue biotech companies to be listed in Hong Kong. So the simple fact is that before 2018, which is just around less than 4 years ago, there was basically zero biotech company listed in Hong Kong. And after about 4 years, 3 years from now, there are more than 30 companies that has raised over over 10 billion US dollars in total for through the IPO listing in Hong Kong. So in terms of the number of companies and also in terms of the amount of capital raised is also very significant and undergoing a very fast growth. So next, I'm going to drill further into the reasons why you need or you want to invest in China Biotech. So one of the major driving factors is that for biotech is particularly for the industry in China is heavily influenced and pushed or supported by the Chinese government. And one thing you need to keep in mind is that according to the what we call the 5-year plan, the 14th 5-year plan that rolled out by the PRC government basically earlier this year, which outlines the overall national and economic development in the society. And one of the major sector, or one of the main areas that they decided to put a lot of effort and resources for growth is basically biotech. And in this 5-year plan, the PRC government, they are very committed to speed up the development in not only the large-scale biotech companies, but also some niche and medium and small-size biotech companies. And also according to this 5-year plan, some major cities, for example, Beijing and Shanghai, they will also strengthen their lead in some high-end industry, particularly in biomedicine sector, and also the life and health sector. And this is the major reason why we think that for the healthy and long-term development for the Chinese biotech, governmental support is very important. The other, even more fundamental factor is the aging population in China, where we can foresee a very substantial growth in terms of the aging, in terms of the elderly or the aged population, particularly over 60 years old. There's actually statistics that we can share in terms of the Chinese population in a few years' time. So there are some industry research which shows that in 2025, which is 4 years from now, the percentage of population over 60 years old in China will reach almost 20%, which is a very significant growth from what we see now. And this aging population will basically boost the medical service demand. And one more statistics that we can share is that just about 2 or 3 years ago, for the biomedicine products, it only accounted for a single digit of the overall pharmaceutical market in China. And if you observe this ratio on a global basis, if you compare the ratio that we see in China versus the average ratio that we see around the world, that average ratio globally is more than 20%. So that means for some innovative drugs and also for some biomedicine, the pie, the share, the wallet share that these biotech products can occupy there is actually a huge room for growth. There's a very high potential for biotech products to gain a much higher market share among the total pharmaceutical demand in China in a few years' time. So there are also some industry research that shows that from now on till 2025, the annual compound growth of the overall innovative drug market will be close to 18 to 20%. So for this slide, you can see here, it looks complicated, but you can only, what you need to observe is the yellow line in the middle. So the yellow line that is upward trending. This represents the overall ratio of China's pharmaceutical and biotech R&D expenses. So R&D stands for research and development. So it's kind of a leading indicator of the overall biotech market share globally. So the reason I say so is that unless you invest in R&D, otherwise, for those biotech companies, they are not going to succeed. So for the R&D is actually the prerequisite for the further development of these biotech companies in China. So if you observe this ratio, there has been many industry research that shows that in the next 3 to 5 years, this percentage is going to grow from around 10% to close to 20% in a few years' time. So there's also some additional charts and statistics that shows you in terms of the market size of the innovative drugs market in China, it's going to experience close to a double, so 95% growth in over the 4-year period. And on the chart on the right, for the right-hand side, in terms of the number of new drugs development in China, you can see that for the past 2 to 3 years or so, the slope is actually upward trending. So until now, I hope that the information that I've provided so far can give you an overall picture of the growth potential of the biotech industry in China. And next, I want to address into more detail and why we think that for Hong Kong, or where I'm situated now, is the best place that you want to invest in China biotech. And as I've mentioned earlier in the presentation, back in 2018, there was a listing rule reform where the Hong Kong Stock Exchange allowed many more biotech companies to be listed in Hong Kong. And the reason why these companies, they are attracted in Hong Kong and they choose and they're willing to list in Hong Kong, I think that one of the fundamental reasons is that they still think that for the Hong Kong market structure and also for the legal structure is much more international and is much more well recognized than the other stock markets in Asia or even in other parts of the world. And for these biotech companies, they will feel that it's a safe and also efficient financing platform where the free flow of capital in the system can ensure that the investors for these biotech stocks they can invest, and also they can liquidate their investment freely and efficiently. And more importantly, as I've spoken to some of the portfolio managers within our firm, as well as the healthcare specialists, the other reason that we think for these companies to list in Hong Kong is their access, is their ability to get US dollar financing. So for these biotech companies, if they list in Hong Kong, they're able to get Hong Kong dollar, right? And they can, due to the Hong Kong dollar and US dollar peg system in Hong Kong, they can easily convert their Hong Kong dollar into US dollar. And in that way, they can actually easily provide the funding for their clinical trials in either in Europe or in the US. So it's a very easy way for them to get their financing. As opposed, if they choose to list in onshore in ChinaAMC market, which is the whether it's in Shenzhen or it's in Shanghai. So if a company decides to list in onshore mainland China, they're only able to get renminbi financing, which they might not be able to convert freely into US dollar for their R&D that I've just mentioned in other parts of the world. So that's why, in terms of the pipeline that we see so far this year, a lot of these biotech companies, they're just waiting to be listed in Hong Kong instead of listing in Shenzhen or in Shanghai. So this basically summarizes what I've just explained in terms of the policy support I've just mentioned, as well as in terms of the aging population. Okay, so for the next 2 to 3 slides, I'm going to give you more statistics that shows you objectively why we think that Hong Kong is the best place. On the right-hand side, first of all, if you compare the overall market capitalization of those China biotech companies listed in 3 major stock exchanges, namely the Hong Kong Stock Exchange. The next one is the NASDAQ in the US. And the third one is what we call the Starboard. Starboard is a newly established board in Shanghai that attracts technology-focused companies to be listed. So, of course, you may know that NASDAQ is also another stock exchange that focuses on technology companies. So among these 3 major stock exchanges, you can see that in terms of the market cap, as well as in terms of the number of companies that are listed in these stock exchanges, you can see that Hong Kong Stock Exchange is still ranked number 1. It by far exceeds the other 2 stock exchanges in terms of the size as well as the quantity of these China biotech companies. So the next question we want to address, or we want to show you, is that although there are lots of companies coming to Hong Kong, biotech companies coming to Hong Kong for listing, the next question you might ask is that, are these companies really have good fundamentals? Are they fundamentally good companies to invest in? So this slide will address your question. First of all, for the left-hand side, you see there are some boxes highlighted in light orange or light pink. These companies are basically listed in Hong Kong. And what do? There are some, these are figures which shows that back in last year, 2020, there are more than 20, what we call the out-licensing deals from these biotech companies. So what are out-licensing deals? These are basically some of the technologies or the drugs that these companies have developed, and they're able to out-license or effectively sell or license out their right for these drugs, for these medicine, or for these technologies to be used in other parts of the world, for example, in Europe or in US. So if a company, they're able to out-license their technology or their drugs to other markets, it's basically a very direct indicator of the quality of these companies. And as you can see here on the left-hand side, basically a lot of these companies, they are listed in Hong Kong. Some of the names that you might have heard as well, for example, Beijing, Innovent, Top Alliance, and many others. The other direct indicator that you can see that Hong Kong listed biotech are good stuff is that you can observe whether or not these companies, they can get what we call the FDA designations from the US. You may hear, of course, from local news that the FDA, the Food and Drug Administration in the US, is basically a very well-known and well-recognized organization for assigning some approvals or designations to certain drugs or certain technology. And among these approvals, there are basically 4 streams, namely the fast track, the breakthrough therapy, the accelerated approval, and also the orphan drug designations. This basically addresses different phases of biotech technologies developed by these companies. And as you can observe in this slide, basically most of these biotech companies that are able to obtain the FDA designations are listed in Hong Kong. So that's also another direct way to show you that Hong Kong listed biotech have good quality. Okay, so for the third part, I would like to share with you, given the basis that you think for the biotech development in China for the next 5 to 10 years is under a golden path. So how can we invest or how can we benefit from this overall biotech development? So before I give you the answer, I want to speak out the difficulty or the challenges first. So as you may also imagine, investing in individual biotech stocks is quite challenging because this industry has a very high information barrier and is it requires very specialized knowledge to study a particular biotech stocks. And for an average investors like you and me, we may not have the professional knowledge to judge whether stock a biotech company A is better than another biotech company B. That's the first challenge that you may face. The second challenge is that even for these biotech companies, they do have a pipeline of many potential drugs or technologies to be developed. They would not rely on only one drug or one type of technology for the whole company. So why is it like this? It's because for these companies, they want to diversify their business risk. So in case certain technology or certain drugs don't work out in the end, they still have other pipelines for the business. And for us, for you and me as a general investor, we also want to diversify the single stock or the risk arising from investing in only one biotech company. So what happens if a certain company didn't succeed in the end? It would for you, you will encounter a very big individual business risk. And thirdly, for investing in biotech, if you don't track an index, it will be quite hard for you to get a sense of the overall trend or sentiment or the movement in the overall biotech sector. I'll go back to this slide. So the answer for these three challenges is that we think investing in ETF is a good idea. So that's something that a key takeaway that I would like all of the audience here to remember. Why is that? That's a very interesting question. Why do I think that ETF is a suitable, appropriate tool to invest in, particularly biotech sector? First of all, if you invest in an ETF, it's actually containing a basket of stocks, not only one stock. And by doing so, it allows you to diversify the single stock risk to a great extent, and particularly in biotech sector, whereby the individual stock risk is particularly high, as I've just explained, because due to the very high R&D expenses, not every biotech company they can successfully go through the entire value chain. Some may succeed, but at the same time, some may fail. So if you invest in a basket of stocks, it can help you diversify the risk. The second advantage for investing in ETFs is that it actually allow you to not require this specialized knowledge in biotech or in medical area to pick a particular stock, because you basically, most of the investors in the retail space, even if you're in Hong Kong or whether or not you're in Singapore, basically it's very hard unless you have a degree in medicine or in biotechnology. So investing or stock picking in the biotech sector will be quite difficult and challenging. And how to avoid this challenge is to invest in a basket of stocks. And an ETF is the easiest way to invest in a basket of stocks. And for those ETFs, for example, listed in Hong Kong, basically all of them are tracking a particular index. So for index tracking ETFs, we call it passive ETFs in Hong Kong. So passive investment is actually tracking a recognized index, and it allows you, or it enables the screening of the biotech companies in a very objective and systematic manner. And this chart actually is trying to elaborate my third point, which is the comparison between investing in passive ETF versus in something more active. You might think that, oh, okay, so I now have a bunch of money to invest in China Biotech. I'll just put my money into an active fund and let the portfolio manager pick the stocks for me. And I think that by doing this way, it's going to outperform the benchmark. Some investors might think so, but for here, we're trying to just give you some, of course, there's some historical data. This historical data is trying to tell you, in fact, investing passively in an index does not necessarily underperform an active fund. And in fact, for the past 2 to 3 years, if you invest passively in a particular index in Hong Kong, for example, the Hang Seng Hong Kong listed biotech index, it actually outperformed two of the quite well-known active funds domiciled in Hong Kong, which focus in healthcare and in biotech. So this chart basically shows you that since 2019 until the end of the first quarter in 2021, the Hang Seng Hong Kong listed biotech index has actually increased by 97%. So it basically close to doubled its performance over the course of the past 2 years or so. At the same time, there are 2 other biotech and healthcare focused thematic actively managed funds in Hong Kong. One of them is more focused in US healthcare, and the other one is focused on a global basis, the global healthcare. And these two funds only increased by 64% and 40% respectively. So in short, at least for the past 2 years or so, if you invest passively in this index, it actually outperformed the other two active funds in Hong Kong. So that's that I would like you to take away, and something for you to remember if you are thinking about investing in China Biotech. Okay, so for biotech index in Hong Kong, I'll say that this index, the Hang Seng Hong Kong listed biotech index, is actually one of the more recognized index that the retail investors in Hong Kong will monitor. This index was actually constructed back in December 2019, and it has a history of about 1.5 years. But of course, for the index company, they can do the back test to show you the historical performance of this index for more than 1.5 years. So for the next slide, I'm going to show you the historical performance. But first of all, I would like to explain a little more about this index so that you can have a deeper knowledge on it. For this Hang Seng Hong Kong Biotech Index, it's actually a quite, I would say, a diversified index, because under the Hang Seng industry classification system, it will include 3 types of companies or 3 subsectors. First of all is the pharmaceuticals. That means the companies that do research and develop and sell medicines. The other category is biotech. Those companies who conduct the R&D, research and development, and the production of biomaterial products. And thirdly, interestingly, it also includes some companies that are engaged in manufacturing medical devices. These are companies that engineer and design new drugs, and also some hardware technologies that are used in the medical space. And fourthly, they also include the shares in Hong Kong under the listing rule 18A, chapter 18A. This chapter 18A is actually the listing rule reform that I mentioned in the early part of the speech, which is the listing rule reform that rolled out by the Hong Kong Exchange back in 2018. And within this universe of stocks, it will also apply some criteria in order to come up with the ultimate constituent stocks. These 2 criteria include the selection through the market cap, as well as the average daily turnover of the shares. So for a 3 months average daily turnover, it has to maintain at least 5 million Hong Kong dollars for the past 3 months. And in terms of the market capitalization, it has to be at the top 95 percentile, top 95% within the stock selection universe for the past 12 months. And it also has a floor to keep at least 30 constituents in this index. And at the same time, while maintaining a minimum floor, minimum number of constituents, it also have a capping on the weighting within the index. It has a 10% cap, 10% capping on the individual weight within the index. So this is the slide that I want to show you. This is the historical performance of this Hang Seng Hong Kong Biotech Index for the past 3 years, which is the darkest red line at the top of the chart, versus the other 2 lines. What are the other 2 lines? The first of all is the one in the middle is the Nasdaq Biotech Index, and the one at the bottom is actually the Hang Seng, the broad-based index in Hong Kong. So you can obviously see that for the past 3 years or so, this Hang Seng Hong Kong Biotech Index actually outperformed significantly, not only for the past 2 to 3 years, it also outperformed year to date. This chart, I think, shows you the data as of May. So it's accumulated the first 5 months of data. And actually, if you include the performance in June, I mean this month, is the year-to-date performance of this index is actually more than 27%. In contrast with the only 5 to 6% for Hang Seng Index, as well as the Nasdaq Biotech Index. So the number tells you that it actually has a very strong and robust performance, not only in the short-term basis, but also in a more medium to long-term basis. Okay, so this actually concludes some of the most of my speech here, but I think some of the audience here might be very interested to know what's actually inside this index. What are the constituent stocks of this Hang Seng Biotech Index? I would like to share the next 2 slides with you. You can jot down these names and do some research on the web. For this index, it actually now consists of 54 stocks, so over 50 stocks. And as you can see, the one at the top, the stock code is 2269. It's actually one of the major and quite famous, well-known biotech company, which is called the WuXi Biotechnology. So right now, actually in June, the weighting of this stock in the index is more than 10%, because it's over the course of the past month, it has basically hit the historical high for a number of times, and hence the weighting in this index has increased. The next stock, the second heavy-weighted stock, is the 1801.HK. This company is Innovent Biotechnology. It's also another well-known biotech company listed in Hong Kong. And there's also many others. Some are pharmaceutical companies and some are medical devices companies. So the list of stocks name is here for your reference. Okay, so I will basically conclude the speech here. I know that some of the audience here have asked some questions through the chatbot. So I'll just scan the questions here. Scan the questions here and then address some of the questions. Okay. So I think there are quite a bit of questions. First of all, thanks for the active participation and for time to listen to my whole hour speech. The first question that I received is from one of the audience, which asks, what does it mean for pre-revenue biotech company? So I think your question addressed to my earlier slides here. Yeah, I think your questions may arise from this slide. Okay, so first of all, for pre-revenue biotech companies, it actually means those biotech companies that does not have earnings yet. It basically means that. But however, this essentially the main reason why these companies choose to list in Hong Kong. Historically, for these biotech companies, for these innovative biotech companies, they can only get their funding through some venture capital or angel investor. However, through the Chapter 18A, this listing rule nowadays in Hong Kong, these pre-revenue biotech companies, they're able to raise capital in their early stage of development. So in other words, from an investor's perspective, you are able to invest in the early stage development of a biotech company versus in the past, you're able to invest in a biotech company only when they are more established and mature. So in order for you to enjoy the highest slope of growth of a biotech company, to invest in these pre-revenue biotech companies is actually one of the, I would say, the popular ways for retail investors in Hong Kong to invest in these biotech companies. If you observe the pipeline of the biotech companies in Hong Kong stock market in 2020, as well as in 2021, there is a long pipeline of these companies, and a lot of retail investors in Hong Kong, they're trying to participate through the IPO of this biotech company. And in case they cannot, or because of the oversubscription of the shares, they might not be able to be allocated a lot of shares through the IPO. They're only able to invest through the secondary market. Then this listing rules basically allow the investors to trade these stocks in the secondary market. And I can say that for this year, actually there's another what we call the B share, the biotech shares, another one quite well-known pharmaceutical name to be listed in Hong Kong today, and there are many more to come. If you track the news in Hong Kong, you will see, or if you look up on Google, you will see a lot of these names. They will come up in Hong Kong stock market in the later part of the year. Okay, so I hope I can address the first question here. Okay, so the other question that I received is that the question is like this: Is there a group of institutional investors following these China Biotech ETFs? So I think your question is simply saying, are there any institutional investors investing in these biotech ETFs? And the simple answer to that is a simple yes. I can say yes. For these Chinese biotech ETFs, it has basically undergone a very significant growth in terms of the AUM over the course of the past year. And in Hong Kong, of course, first of all, due to compliance reasons, I cannot speak out the name of these ETFs. But if you look up on the web, you'll find that in Hong Kong market, there are 2 ETFs tracking different biotech indices. One of them is the one that I've just mentioned, the Hang Seng Hong Kong listed biotech index. And for the AUM of these ETFs, it is actually undergoing a very substantial growth. And the majority of the growth of some of the ETFs here is mainly driven by institutional investors. For these institutional investors, for the breakdown, I would say that there are quite keen interest from some major insurance companies in the region, because they, apart from the core portfolio, for example, they want to invest in the most broad-based ETFs. For example, the Hang Seng Index ETF or the Hang Seng China Enterprise Index ETF. These might be their core portfolio, but on top of that, they would also like to invest tactically in some thematic ETFs. And among these thematic ETFs, biotech ETFs is actually one of the major themes that they want to invest. So the answer is yes. There are institutional investors investing in China Biotech. And I've seen an interesting question. So there's an audience, Sui Long, asking that for this biotech industry, will it face scrutiny like Huawei for challenging dominance of West in this segment? So I think your question refers to whether or not these biotech companies, they may face sanctions or some executive order from the US, right? I cannot speak on behalf of the US government, but I can tell you the fact that at least for the index that I have introduced today, the Hang Seng, let me check. For this index, the Hang Seng Hong Kong listed biotech index, and currently there are 54 constituent stocks right now. I can tell you that none of these stocks, at least for the time being, are under the sanction list of the US. Of course, if you are close to the news, you will see that for the executive order or for the sanction in place by the US government, they mainly target those companies that are engaged in very high tech or hardware technology like Huawei, not in the biotech sector. So we haven't observed any action against any of the biotech companies in China or listed in Hong Kong so far for the past year or so. Okay. Okay. So I've also there's another interesting question from Mr. David Chow. He asked that in general, is China lagging behind the US in terms of the biotech development? If yes, how many years? Okay, so I'll say that the for the overall biotech industry in China, for the whole development, it started at around 2010, around 2010, and the rapid development actually started since 2016, so about 5 years ago. So what happened at the time? Back in 2016, there was some major support or changes in the policy by the PRC government in terms of the overall drug approval process in the China pharmaceutical market. And from that time onwards, the overall drug approval system or the overall pharmaceutical market system has become much more international and much more scientific. And at that time onwards, in terms of the capital market development, there are much more stocks which developed rapidly and ultimately able to list in the stock market, either in the US or in Hong Kong or in onshore China. And for your questions, is China lagging behind the US in terms of biotech development? Yes, I would say that roughly China is behind the US for more than 10 years. And one thing to keep in mind is that US is right now is actually the most developed and mature biotech market already. And China is actually lagging behind, but it's actually chasing. I mean, is keeping its pace. It's catching up very, very fast. Okay, another audience asking, what are the weighting of the constituent stocks of the ETF based on? Okay, so in simple terms, it's actually the weighting is based on its market cap. So for this Hang Seng Biotech Index, is weighted according to the free float market capitalization of the ETFs that fall under the top 95 percentile of the overall stock selection universe. Of course, it has to also satisfy the turnover requirement. Okay, another question from the audience asking, what is the expense ratio of this ETF? So I cannot speak out the name of the ETF, but for the only ETF that tracks this Hang Seng Biotech Index, currently the expense ratio is around 0.7%, so 70 bips. Okay. Another audience, Mr. Mike Ng, asking any dividend and also cost of the management fee of. Okay, so first of all, for this kind of growth stocks, you may also know that for growth stocks, the dividend payout will be quite minimal. So if you invest in such thematic biotech ETF, don't expect to receive a lot of dividend from it. Right now, for this index, I think the dividend yield is around only 60 to 70 bips, so 0.6 to 0.7%. Of course, it's not high dividend by any means, but if you invest in such ETF, you're investing in the capital growth of the ETF rather than the dividend payment from the ETF. And for the management fee, for the one listed in Hong Kong, the management fee is 50 bips, and the overall expense ratio is around 70 bips, as I've just mentioned. Okay. And another audience asking Mr. John Chang, trading volume of the ETF appears very low. What plans are in place to improve the liquidity? For that ETF tracking the Hang Seng Biotech index, it's actually there are more than 3 to 4 market makers, or what we call the liquidity providers, to provide sufficient liquidity. And in case there are huge size coming in, these market makers can actually facilitate the liquidity at any time. And for retail investors, one thing to track the overall liquidity of the ETFs is actually not by the trading volume. For ETFs, due to the creation and redemption mechanism, actually the underlying implied liquidity is much larger than what you see appear as the trading volume of the ETFs. So in simple terms, if there's actually huge demand to buy such ETFs, those market makers or the liquidity providers, they can actually create ETF units right away to absorb the buying demand. So no need to worry about the trading volume of the ETF. Okay. And okay. And for some other audiences, it asks about the stock code of the ETF. I think I'm able to only address this after the webinar here. And the last question I received is this webinar recorded for later viewing? I will pass this questions to the colleague at Phillip Securities. Thanks very much for your time. I'll just pass it on.
Yeah, thank you, Daniel, for your presentation. Okay, so we have come to the end of the webinar. Thank you everyone for staying through. So before you leave, please help us to fill up the feedback form. And if you have any questions, please drop us an email at talktoglobalmarkets@phillip.com.sg. I will be leaving the email address in the chat box. Yeah. Yeah. And thank you, everyone. Have a good night. Thanks, Daniel.
Good night, everyone.